Hi, and welcome to the Common Sense Show with myself, Celeste Maddox, Luke Davis, and today we have Aaron Pickert with us.
Hello.
This is season 2, episode 5.
It's been a while, Celeste.
It has been a while. Not to our listeners. Hopefully, they're just like consuming episode after episode. So, well, today we have, it's great to have Aaron Pickert with us. And for those of you who don't know or you've forgotten, Aaron is a financial advisor and our chief investment strategist at Stewardship Capital. We are really honored to have him with us. If you know Aaron, he's a man of few words, but you need to really pay attention to those few words that he does say. Today, we are not going to have as few words. It's going to be a bit more than a few, but stick with us. This is really going to be a little bit longer than usual, but definitely worth your time. So, Aaron, before we go into the meat of what we're going to talk about, can you lay the foundation? Tell us a bit about your philosophical approach to investing.
Well, really, it's a philosophical approach, I think, to the subject matter. I didn't want to come across as overly political. I view myself as pretty agnostic in that category.
I'm the overly political one, just so everybody knows.
That's Luke's role.
I certainly have my feelings and opinions and emotions, and sometimes I'm on the left, sometimes I'm on the right. But I generally just try to look at it as, what game are we playing? What is each person motivated to do, and then how do I win versus having too much of an opinion about why they're doing it or how that falls into the left versus right. Because I feel like if we're falling in the left versus right, I find that boring, and I think that's right where the government wants us is to fight left versus right. So I just wanted to kind of lay that philosophical approach as we started.
Awesome. Well, I know there's a lot on your mind at the moment, and we're kind of going to delve into what's top of mind for you. What's your major concerns at the moment? So I will give the mic to you.
Okay, great. Well, I started off with what game are we playing here? And I think it's important to know what game you're playing, and there's nothing worse than playing by the wrong rules. And so maybe while we're not in a new game, per se, I definitely think we've entered an acceleration or an amplification of the game we've been playing for a while. And that game is essentially, government spending, debt, and government control. And so it's a really big subject. I think it takes a lot of time to cover. I wish I've been trying, I think, for a year to get it succinct as I can, and it's difficult.
Well, hey, we're up to having this in 3 parts, in 4 parts, whatever it is that we need to do. But give us as much as you can today.
So I think at the center of it, and it's on top of, I think, everyone's mind is debt and government spending and inflation, and then you just have to bring in interest rates, and I think in all of that, you also have government control. And so I think we've entered a new acceleration phase here where the government now is, I would call them, audacious. They have entered a stage with media control and of the airwaves and AI bots to circumvent conversations and silo them over here and there. I think that they're at risk of making some major political errors, but I think it's obvious, Luke. Don't you think they're audacious? They don't care.
Yeah,
what we think.
It used to be, at least, you mentioned this as the game. That I think for a long time the game has kind of been fixed, but the powers that be, whether it be government or media or corporations or whatever. They tried to hide it or tried to deny it, and now they're a little more overt in just their flagrancy of, this is the game, it's fixed, what are you going to do about it, kind of thing.
Yeah, they're almost just slapping us in the face and saying, what are you going to do about it?
Right. You're just a pawn in this game that we're playing. Good luck.
Yeah.
Right?
And again, I think that opens them up for some major errors, but that's their mindset, I think. And I think, look at the election. It got us right where we want us, left versus right, and look at these choices. And I think I haven't talked to any person that says, I like these choices, and these are the people who we would want up there.
I do think that there's a clear rise in populism and this idea of us versus them, and it's time for the people to rise back up because the game has been fixed for too long. That's part of what we're seeing, right?
I think it's a good segue. Is that you remember there used to be the Occupy Wall Street movement,
right?
And that was basically protesting against the uber wealthy, the wealth divide of the 2008 financial crisis, and that seems to be kind of gone from the conversation,
right?
And maybe that's the media control. Maybe people are just busy and looking the other way. I don't know. But, COVID was a major boom for the uber wealthy.
Right. Absolutely.
Yeah.
I mean, the percentage of wealth that they now control, I don't have the numbers in front of me, but I'll make it up. It's something like went from 25 to like 36% of the 0.1% owning all assets. So it was a major transfer of wealth. And so I think we've got a growing, undertone of the populism and people getting angry, but there's no mobilization, and then you have this audacious political view.
Yeah, and it's weird because when we have this conversation often, we're just recording it now, that it used to be that, not to make this all political or the partisan, but it was always the Republicans for the rich and Democrats were for the poor, and who's looking after you, so you need to be one or the other based on your situation. I think the curtain has been pulled back, and now we realize that the powerful, none of them are looking out for the everyday person. Is that fair? And that COVID just
there was a really
exposed it.
A really great article out on Financial Times where this reporter went down to Mar-a-Lago, and it was the party season down there. And the winter time, and
right.
And the main takeaway was, hey, I hung out with all these very wealthy people on the left and the right, and it felt like the least divided place in the world to me.
Yeah, that they're all really on the same team. They just pretend like they're not.
Yeah, and so they these Ivy schools or whatever they're brought up in, they're in these ivory towers, and they know it's a game, and they play their game. They can go on TV and spout this or that, but they know what they're doing and playing, and that they get off camera, and the person they just shouted against, they're going in for a round of golf with.
Yep. No, I think and I think to some extent it's always kind of been that way. But whether it be the rise of social media, the rise of whatever it is, we see it more, and it's very apparent now, where it used to not be so much.
Yeah, and so I think kind of shifting this forward then is, I got my heart broken over the last
I know you did
6 months or so.
Oh,
not romantic.
Jerome did it.
Jerome Powell, the head of the Federal Reserve, he broke my heart, and he broke a lot of people's hearts that were following along. That he cared about getting inflation under control, and I believed him, and a lot of people believed him, but clearly, in my opinion, that wasn't the case, because as soon as it came time to, win another election for the current party in power, he very quickly shifted into loosening financial conditions, where he said in the beginning that he was going to err on the side of a recession and get inflation under control, and that it was important to do so now, because if you don't, it becomes something that really spirals out of control over many years and a decade. And so let's take our medicine now. And I think that's the right policy, and I could be wrong.
He's still talking like that, but you don't believe that he's actually going to do it.
He's talking out of both sides of his mouth now, but his
Yeah.
actions were clearly to loosen financial conditions late last year.
Yeah.
The market went on, I think one of the fastest tears it had ever gone on in a month period.
Yep.
And, it's hard not to look at it as a political move. And the Federal Reserve is supposed to be independent to politics, but always suspicious that it wasn't. Clearly, I think at this point, after him breaking my heart, I will never believe it's not together.
So do you think the motivation is just to protect the wealthy as they currently are, regardless of what party or whatever, that it's just kind of, once again, them protecting their own? Is that what you think?
I think that, they got the ivory tower scenario here where they're hoarding all the wealth, and they now own, as we said earlier, so much of the assets. They don't want prices of things to go down, so they don't want an '08 housing prices down, deflation of goods. They don't want any of that because they own it. Mm-hmm. And so they're protecting themselves and not viewing the greater good of distributing wealth when you have too much and saving the system. They're thinking, well, let's just keep going with what we have here, and the people on the on the lower classes can fight it out.
What does the status quo? What does that end up resulting in? Does that result in markets going up, going down, being stagnant? What does this mean if we continue? If we take your assumption, and I think it's accurate that the powers that be have pretty much locked up all the pieces they need to be in power, remain in power. What does that mean moving forward?
Well, I think it creates a lot of chaos. I think it creates a lot of confusion. It creates a scenario where usual old signals and price signals and things are no longer valid. And it becomes very difficult to see how this does end. And, I think at the end here, we'll go into that more. But I can't go on without reading something from John Keynes.
Uh-huh.
And he's actually talking about Lenin.
Classic economist, yeah.
And he says, it said that Lenin is said to have declared that the best way to destroy the capitalist system was to debauch the currency by a continuous process of inflation. The government can confiscate secretly and unobserved an important part of the wealth of their citizens. By this method, they're not only confiscate, but they confiscate arbitrarily. And while the process impoverishes many, it actually enriches some. And so the side of this arbitrary arrangement of riches strikes not only the security, but also the confidence and the equity of the existing distribution of wealth. So people start to see that the system is very unfair, and so they have to start playing a very different game. And it's such a great, with inflation, basically no one knows quite where to point the finger. Mm-hmm. But it's very clear if you think about it, how they are confiscating your wealth, because they're keeping asset prices higher. That means prices don't come down. You're losing your purchasing power to buy things, and everyone can sit here and fight about Trump and Biden and not quite figure out exactly and point the finger directly where it's at. And so, I think it does open it makes it for a new game, because instead of that '08 deflation, where things kind of correct themselves, and if you think about what they did after '08, they reacted slowly with what was quantitative easing. They basically flooded the system with money, essentially. They thought, well, that worked out nice, and look at how well it went for COVID. We went right with the bazooka. We didn't wait. We went right after it. And gosh, look how that worked for us too, for the uber wealthy. So now that we're in a system where anytime something starts to crater that seems like a threat to the system or a threat to, interested parties, they're going to instantly step in with liquidity. Uh-huh. And so what that does is, and the government spending right now is at some of the highest levels you'll ever see as a percentage of the budget.
And no chance of it going down, really, right?
It's actually coming down a little bit, but in a percentage sense. But we're still at levels that are higher than the Great Financial Crisis. this is spending normally reserved for getting us out of a major recession or a war. But we have, maybe no such thing right now, and they're just spending like crazy. And so prices don't come down. And so maybe you don't lose your job, but you can't afford bread. And for the middle class, maybe that's amenities that you're used to. And when you think about most parents want their kids to be better off than themselves. And that's worked by and large in America for so long.
Yeah, every generation has done better than the one before it.
And so if that's not true anymore, or potentially not true anymore, it changes the game and how you play it. And I know we kind of just went all over the place there, but to get ahead, you have to start taking bigger risks and or becoming more corrupt. It's who you know. And getting the contracts from the government or ponying up with this person. You have to play politics or you're going to be left behind. And, I personally don't love that, but we were here today to talk about what is the game that's being played and how do I win it.
And so if I'm understanding you, what you're basically saying is some of the standard rules of a free market that, the meritocracy of free markets where those who provide the best widget at the cheapest price are the winners. Now, that's not necessarily how you determine where you invest.
Now it's how to hang on for the next bailout.
Right. And who's most connected to whatever system controller is there, right?
Well,
Yep.
what I also hear, I'll represent the layman here, but those like key leading indicators and lagging indicators of that economic cycle, those waves that go up and down, you're saying that we can no longer really rely on those as to where we're heading next because they're just full of corruption, they're being inaccurately manipulated.
Yeah. Yeah, I was part of the group that was fooled thinking we were going to have a recession.
Yeah, I know you were looking forward to it. Yeah.
Yes, for the greater good here.
Yes, for the greater good.
And now it seems clear that that's not, as Jerome Powell didn't want to play that game.
Yeah.
They're going to protect, the uber wealthy. And so I still think there's going to be recessions, and we may be on the eve of one here. But the reactions and the way the market reacts to it may be very different. We may not have a down 30% market. Maybe it's down 15, which still hurts, but it's very quickly interjected with liquidity and comes back, let's say, all the way back to even. But inflation's roaring at 3, 4, 5%. So you're in real terms, you are losing wealth.
Yeah, that's always been, don't you always refer to it as kind of boiling the frog? That a way in which you can take from people without them being quite as aware of what you're taking from them is giving them a raise, giving them whatever the thing is, but you're really taking it back because you're charging more for the things that money would provide, and so that in some ways you can keep people more docile than if you just declared we're taking this from you.
Yeah, we're taxing you.
Right. Like we're just gonna do it a different way that you don't realize quite so much.
We're gonna take away your we're gonna reduce your Social Security, or we're gonna raise your taxes.
Right.
Whoa.
Right.
Just take it on the side, please, when I hardly notice.
Right. And that's kind of what's happening here, right?
Yes, I think that's exactly what's happening.
I think the way the media portrays it as well is phenomenal. It's brilliant and sadistic all in one. People don't even know what's coming, and they're trained to watch out for these trigger words like recession. Oh, so no recession, and that's a great thing. But you're just explaining why it's not necessarily great for the greater good.
No, and I think it's terrible because I think it forces us to play a different game of degeneracy. It's like, well, you know what? I need to take a risk on Bitcoin or something. I'm not saying that's couldn't work out and be a good thing, but you have to look at how to get ahead in non-productive ways.
Yeah.
It's being a historian, and I'm I often like to say that we are Rome. The question is, at what stage of the Roman Empire? Where are we in that whole, scheme of things? But as things really started crumbling for the Roman Empire, and unemployment was through the roof, and they were trying to just keep this thing going, they just started giving people money and giving them distractions like the circus and other things like that to keep people from recognizing that they were starving.
Yeah.
Mm-hmm.
And it feels a little bit like that to me. Am I wrong?
Yeah, I mean, what's that? Just give them an Apple headset and let them live
Right.
in the virtual world, and
Right. Absolutely.
and
just
get legalize gambling and everything like that, and they'll be happily despondent.
right, and give people things to cheer for, things to rail against, and none of it really matters, but that's what keeps people focused.
Yeah, it's Biden. It's Trump.
Right. Right. Exactly.
I feel like I need to make a ton of disclosures after this podcast. Like, we are not encouraging you to involve yourself in corruption. We have nothing against Apple. There's a couple others in there.
I have things against Apple for the record, so
Well, then that's a great segue too. Then, so so what should we do?
Mm-hmm.
How do we handle the situation, especially with our investments here? And there's no clear answer, to be honest. It's more of an exploration. I think it becomes incredibly difficult because it's tougher to know the signals.
Yeah.
Things aren't as logical. You have to live in a logical. The logic is this game we've been talking about, which is harder to play. And if you want to play, you need to be corrupt or take major risk. But I think for most people, I think what you have to focus on is how to maintain your purchasing power and how not to make some major mistakes. And I think that's my biggest fear for investors, is that so many people are retiring, the boomers. They have so much wealth. My parents, I think about their generation, and that they have most of the wealth. And in this world, there's going to be so many whipsaws. And you're going to be so upset at the system, at the left, at the right. I don't understand this world. And so I do worry that people are involved in the market, but there's going to be so many incidences over the next decade that force them out. They say, I don't want to do this.
Yeah.
And then we talked about boiling the frog. I'll take the 4 or 5% money market, but inflation is running around there or higher.
So you're getting nothing.
So I'm really not gaining ground, which maybe that's, I think maybe a lot of boomers might say that's okay.
Yeah.
I just don't want to lose purchasing power.
But so many didn't save enough that they can't just take out monthly distributions and be okay. They have to have growth.
And that's why you do need to own assets in this world, and you're playing along with them. And so, that leads into, if we live in a higher inflation environment, if that's truly what we're going to be living in, and it'll be volatile, and the volatility of the inflation is the roughest part. If I tell you we average 4%, it may not sound too terrible, but that means it's at 7 at times, and it's at 2 at times.
And things like gas are way higher at some times, and the things that people buy may adjust.
So how do you plan?
Yeah.
And so in this environment, though, it's generally you're going to want to own businesses that don't need to borrow money, that have a mousetrap where they have good margins. Then you want to own things like gold and silver, commodities and real estate, these harder assets that there's so much competition for the bid on those things that it's a different game, and we haven't played this game really since the 70s. A lot of this, I think, a lot of us are modeling the world after the 70s, what did good during then. And so these were the commodities, the real estates, gold and silver, things like that. And Bitcoin has been a huge centerpiece of the current inflationary movement. If you think about right before COVID, it was sitting, I think Bitcoin was around 8,000 or so. And then it shot to 60,000 as soon as they flooded the system with money. And now people can own that in ETF. And not to make this a Bitcoin deal, and I'm not endorsing it per se, but that concept has been playing out with owning something that is opting out of the system, essentially.
That's interesting, and I know, but you expect Bitcoin or other cryptos to be perpetually volatile in the future and not, it could go any which way, right?
Yes, of course. But definitely something to watch as you watch the system being flooded with money or not. But in general, I think the investment game here is to be careful not to be too knee-jerk reactionary to the whipsaws. And it's really a tough game, because what if things are ending or going to be very, very bad for years to come? We haven't lived in a market that's been down for 3 years. If you look in history, that's very common. There are those periods. But it seems like we live in a world that doesn't want to allow that. So I think you have to ask yourself today, if you think you're going to react negatively and pull your money in the market and try to picture the market going down 15% or more, would you probably, and imagine terrible political, geopolitical war, if you know you're going to pull the trigger, then you probably need to make a change in your overall strategy, where you don't go all out, but maybe you're not as exposed to the market. Maybe you do have more in money markets and CDs and fixed annuities and things like that, to where you are just trying to more hold your purchasing power at that 4 to 5%. Because if things get out of hand with government spending and inflation, then we're in big trouble. If inflation's at 8, 9, 10%, we're all it's a world of hurt. There'll be pitchforks. They'll react as best they can to get that under control. But I think the government is quite happy with 4-ish% inflation. When it gets to 4 to 5, I think they start to realize they better ease off on things.
Well, Aaron, you're always so optimistic in these things. You're like a bowl of sunshine. Just makes me want to go out there and just.
I feel like going back to South Africa, guys.
I bet you had no idea when you arrived in the most wealthy and powerful nation in the world that all of the same nonsensical things you're dealing with. It's just bigger and a little more hidden.
Are we becoming an emerging market? So. Well, I'll just end with that, I do think an active approach is, a better approach in this environment. And we are active advisors. But it's very difficult. It's a more difficult active environment. And so, there's something to be said about being passive, finding your mix. But I think your mix today is probably needs to be quite a bit different than it was over the last 20 years. So it's finding that right mix for each investor that's going to keep them in their seat. And our hope here through active investing is to overweight and underweight in the right areas at the right time. And I do worry that maybe the market could keep going another 10, 15, 20% higher, but will eventually why I wish we had dealt with the inflation early was there's still, at some point, this ends very poorly. And we could be happy with a market that goes up, let's say, 20% over the next 2 years. But then we hit the brick wall, and it comes all the way back to where we are now, which doesn't seem maybe so bad. But you just spent the past 2 years going nowhere while inflation was higher.
And worrying about it.
Yeah. So.
Well, I think the one thing that I clearly know is just the need to work with a financial professional is, I think, more important now than ever before. And I'll put in a shameless plug for you. If you're looking for Aaron, find him at www.stewcap.com. But you're willing to continue these conversations with people, I would assume.
Yeah, definitely.
Reach out to him. It's so important to just make sure you're on the right track. Your retirement is is your golden egg, basically. You don't want to mess with that. So,
well, and you'll even look at at somebody's investment portfolio and see if it does align with these kind of more conservative feelings they may have if they don't know.
And I'm the first person to say, your portfolio looks pretty good over with, XYZ advisor. I just stick with that.
Yeah.
I say it all the time.
Great. Well, thank you, Aaron.
Thanks, guys.
Like I said, I need to go get a Xanax after this talk, but I'm sure it'll all work out in the end.
It always does.
All right, thank you.
thanks. Great to having you on.